Okay, so on a daily time frame, on the DXY, you can see that we closed below the previous candlestick low. Okay, so after that closure, we'll be expecting C3 to continue to the downside. Okay, so when you go down to the 4 hour time frame, you can see on the 4 hour time frame, we don't have any favor gap here on the 4 hour time frame. Okay, so the previous 4 highs are the H1 highs, relevant highs. All right. So when we go down to the 1 hour time frame, you can see that on the 1 hour time frame, you have this high. Okay. So after that favor gap, let's check. You see, so after that favor gap, you see to then mitigate it because we've not yet broken below the low. All right. So if price returns to this favor gap, we'll be expecting price to sweep this high and then we get lower time frame shift to then sell to the downside. Okay. So that's my narrative for the dollar index. All right. So when you go down to the Euro USD, you can see on the Euro USD, we closed above the previous candlestick low. Okay. So we swept the low and we closed above it, indicating a bullish price action. The DXY is bearish and the Euro is bullish. Okay. So when you go down to the 4 hour time frame, you'll be expecting price to mitigate a fair value gap here. We are not yet having a fair value gap. So if price decides to give a fair value gap, we'll be expecting that fair value gap to be mitigated and then give a shift to the outside and then retreat. But as you can see, this is a long way. So we'll be expecting price to print its low in the upper half of the EQ. Okay. So on the 4 hour time frame, as you can see, we don't have any fair value gap on the 4 hour time frame. And this is the relevant low on the 4 hour time frame. So if price decides to sweep this low, we'll be expecting a lower time frame shift to then buy to the upside. Or better still, on the 1 hour time frame, we have this low here on the 1 hour time frame. We don't have any fair value gap here on the 1 hour time frame. Only the low here and then the low here. So this low is a 1 hour relevant low, and this is also a 1 hour relevant low. So if price decides to sweep this low, we're waiting for a lower time frame shift or an SMT to then trade to the upside. The same thing applies to this side. Okay. So on the GBP USD, you can see that we also closed above this low here. Okay. So we're expecting price to then have a C3 continuation to the upside. Okay. So this is our relevant high on the daily time frame. So we'll be expecting price to then test this high. Okay. So on the four, sorry, we didn't create any favor gap on the 4 time frame, but this previous H4 low is an H4 H1 relevant high. This two is an H4 relevant low, and this is our H4 relevant low because it's an previous is a previous H4 low. All right. So when you go down to the 1 hour time frame, you can see on the 1 hour time frame. Sorry, on the 1 hour time frame too, we don't have any fair value gap here on the 1 hour time frame. So we'll be expecting price to sweep this low or this low and give a lower time frame shift or SMT to then trade to the upside. Okay. So DXY is bearish, Euro is bullish, and the same thing applies to the GBP USD, which is bullish. Okay. So when you go down to the Euro GBP to then know a strength switch here, you can see that we have this close here to the downside. Okay, so indicating that the next candlestick will be a daily C3 continuation to the downside. Okay, so we have this break here, and this is the consequence encroachment or the midpoint or the EQ. So we'll be expecting price to then create its wick here in the lower part of the EQ and then trade to the downside. Target this low and then this low. Okay, so the euro is bearish, the GBP is bullish. So with using this strength switch here, you can look to trade this GBP USD more comfortably than the Euro USD, because the Euro USD is bullish. All right, the GBP is bullish, but the Euro is weaker as compared to the GBP, which is bullish. So these two suggest a bullish action, and then the DXY is weak. So we'll be expecting to trade this GBP USD as it will be more volatile.